Good morning, everybody. Happy Monday. This is the morning show, Stock Market TV. Spencer, JC, Steve, Alfonso. Hope everybody had a very lovely weekend and a lovely Father's Day. Yesterday was not just Father's Day, it was also a very important birthday. We'll talk about that in a second. If you read JC's note this morning, you know what I'm talking about. Happy birthday to the current bull market. What else is on the list today? Let's see. Well, we have a new guest on the show, Mr. Matt Caruso. He'll be on in around a half hour or so, give or take. And we always love having new blood. So looking forward to that. Matt Caruso, 9 o'clock. Ian Culley later on around 9:40. We'll talk commodities. We'll talk currencies. We'll talk fixed income. It'll be a good time. It'll be a good time. So good morning, chat. I see you guys. Rudy, CC, Ron, Luke, Dawson, James, Hot Pepper. What's up? What's up? What's up? Should we roll? Let's roll.
What's up, everybody? Happy Father's Day to all of those who celebrate. The two of you, maybe one day we'll find out, what it's like. It's a good feeling. Went to the beach yesterday with the family. Last year went to a minor league baseball game. So that's cool.
Do you get to do what you want on Father's Day, or no?
You can tell you're not a father. No, that's not how it works at all.
He does what he wants every day. Come on.
No. You're told that you get to do what you want, but you definitely don't. What is cool? I was explaining to my 3-year-old daughter how the beach is magic, right? Because we watch a lot of cartoons and there's always magical this, magical that, and all that stuff is fiction, obviously. So I explained to her that in real life, the beach, between the salt water and the sun and walking on the sand and how all of that affects your body, the beach is as magical as it probably gets in real life. Is that right? Is that accurate?
I think that's a great take. You know how I feel. Yeah.
Beach is my happy place.
Was that a good take? All right, another question. Ready? Got another question. You see, I think a lot of, Fibonacci Day is officially on November the 23rd.
Yeah, I know.
Which makes sense because it's 1, 1, 2, 3. So it's the first 4 numbers of the Fibonacci sequence. So November 23rd, International Fibonacci Day. Totally get it. But tomorrow is 618.
Fibonacci Extension Day.
Why don't they make Fibonacci Day June 18th then?
That's what I'm saying. So for you Fibonacci enthusiasts out there,
you should celebrate.
Who will not stand for this.
Yeah. It should be.
I want to know if I'm alone here or if there's a community behind me where, maybe we can organize some protests.
Can they just change it?
We're not setting cars on fire in San Francisco or anything like that. So get that out of your head.
Well,
but just want to know.
Well, can't they just change it? They change holidays sometimes. They could just change it.
But there needs to be a movement in order to make progress. This aggression, it will not stand, man.
I don't think enough people care, JC.
I know that's what I'm afraid of. Is that there's just not enough awareness. We really need to build this awareness. And if you're with me, everybody, feel free to reach out. We could start maybe group sessions.
Wait. Why can't tomorrow just be Fibonacci Extension Day? Fibonacci Day, Fibonacci Extension Day.
It's a golden ratio, Spencer. It's more than just a retracement. It's a lot. It's a lot bigger than that. It's not always about you. All right. It's about nature. It's bigger than that. So,
oops.
So listen, we have a discussion to settle here. Update from about a month ago now. My mom texted me this morning, reminded me. I totally forgot they were there. She said, "How's the new IKEA furniture?" I said, "I don't know, Mom. They're stacked in boxes in the corner of my living room still." I've looked at it. I flirted with the idea of the build. Okay, I even pulled it out. Yesterday morning, I had a nice lazy day. I think, I had time on my hands. I pulled it out. I started to read the manual. It says estimated time 2 hours and 45 minutes. I know that probably means it's going to take me 4. I can't wrap my head around doing something like that on a Sunday. My weekends are
Told you
usually,
from the beginning. I don't know why you would. You hire a guy, you pay him $20 an hour, you got it done. It's not a big deal.
I feel like such a
Stop
scumbag.
buying IKEA furniture. What are you? What are you? 23? What are you? Just out of college? Like who buys IKEA furniture? It's stuff is garbage.
Dude, it's just low budget here. You know, I'm not going to be here forever.
Steve, the best part about IKEA is it's so popular. You can go on YouTube and just search your thing on YouTube, and there's a video there. But more than likely,
I'm not going to do that. Like, I could build this. I could do it. That's not the problem. I could do it. I'm not worried about the.
Yeah, I could mow the lawn. It doesn't mean that I'm going to. Like, I could use a chainsaw and like cut some trees down, but I'm definitely not going to do that.
So I had the right idea. I had the right intention. I really did want to build this. I can't get myself to do it. So I'm going to make
do it.
I really want
to. Do everybody a favor. You're going to screw it up too because these things are made out of shit.
All right.
So you're
the world
screw
knows.
It in too hard. You're going to ruin the furniture. Try not to touch it. Try
the
to
world
look at
knows.
it.
Steve, don't worry, everyone. Steve, he wanted to build it.
I wanted to build it.
We all know that.
Yeah. I thought like
more important things than Steve's bad decision making.
Oh my goodness.
I want to talk about the U.S. Open too. Did you guys see that finish? Did you see why golf is so hard? Like what a just mind. Oh God, who feels bad for Rory McIlroy today? So
he's hooking up with the reporter, isn't he? Good for him.
I don't even pay attention to any of that. You're like my buddies on the golf course. I have no idea who he's hooking up with. 69 holes. This guy gets through 69 holes. Doesn't even come close to missing a putt within 5 feet. The last 3 holes, he's up by a stroke. He misses 2 putts within 5 feet. You think that's not nerves? You think that's not stuff going on in the head as he's, coming in on the final 9 at the U.S. Open? I'm so bummed for him. He's the best golfer consistently since the Tiger Woods era. And he hasn't won a major in like 10 years. And he's just such a class act. So good. He's got by far the best golf swing you'll ever see.
Class act.
And
class act. Yeah, unless he's playing against the Americans. You know what? Screw him. I hope he loses again. I hope he keeps screwing up. I don't feel bad for him one bit. That's what happens for running your mouth, Rory. Next time, keep your mouth shut, play your game, and maybe you won't screw up so bad, huh? Come on now.
About things that matter. He's coming
to the U.S. Open. Americans supposed to feel bad for him. Nobody feels bad for him. Screw you, Rory.
That's not like that in golf. People aren't like, I hate this guy. He's
all right. I'll send you the videos. Go ahead.
I'm doing.
Shout out America. Dow futures down over 100 points this morning, close to 1/3%. S&P futures down 7 points, pretty much flat. NASDAQ futures flat, hanging out just under 20,000 for the NASDAQ. How about that? Bond futures getting hit hard, 0.75% to the downside for 30-year futures. Crude oil up 40 basis points, 78.5 for crude oil. Copper down 2%, down to 440. Gold down 0.2%, 2,333. $2,333 per ounce. Silver down 0.5%, 29 1/3. And volatility hanging in there above 13. Over in the funny money, of course, Bitcoin down again as this breakout continues to fail. 65,600 for the BTC, down 1,000 points this morning, 1.5%. Ethereum down 100 points, down almost 3%, just over 3,500. Solana 144, down 7 points, down 5% this morning. And Binance under 600. Strazza 598 for Binance. Really, really roaring it. Binance had all the opportunities in the world. Pulled a Rory McIlroy. Really screwed that one up. 600 down 2% for Binance.
So just to update you on where I'm at, last 2 weeks I was putting on these big risk reversals using vehicles like Mara, Riot, Coinbase, and the resilience in the charts was great. So the puts paid for the calls, but the calls haven't paid yet. So I'm here this week thinking, do I swing again? Pretty much no losses, but no gains either on these trades the last 2 weeks. I'm not reloading yet because the outlook has kind of changed, right? So I that could change by the end of the week, but I need to see some sort of momentum back into the 70s before I get excited about this trade again. For now, I think it's on pause. That's how it feels to me. What do you think?
I mean, you know how I feel. We're below overhead supply, and I learned at a young age, had to learn it the hard way, that buying things below overhead supply is no way to go through life, son.
Yeah.
That's how I learned it. So I stick with that. Life is better when I don't do that. I mean, look at this tan. Come on. See, you think I would have this tan if I was trying to buy things below overhead supply? Absolutely not. Absolutely not.
Beach JC is the best JC.
What?
Beach JC is the best JC we get.
It's magical, the beach,
It is.
as we discussed before. Can we throw up slide 2, please, Spencer Israel? Because I want to show the performance of equities over the last 15 weeks. 15 weeks since March the 1st. 15 weeks. Check my math is what? Like almost 4 months, basically? 3.5 months?
Close.
3.5 months, right?
Yeah.
March,
So,
April, May, and half of June. 3.5 months, right?
do you ever wonder, JC, how many birthdays does a bull market get before it dies?
Yeah.
You know?
4-year cycle, isn't it?
Is it supposed to be 4? Is that the way it always works?
You know what I've learned? I learned that every time is different.
4 years. That's a long one, huh?
Yeah. Yeah, I have all the stats. 18 months to 36 months or something like that. You know what I'm saying?
Do those stats help?
No.
They don't help? Oh.
They don't help me. I mean, they don't mean, you want to get a pretty good idea as to they last a few years. Yeah, okay, thanks. Moving up, turn the page,
I like it.
Okay, so last 15 weeks. This is the performance since March the 1st on an equally weighted basis. Both the S&P 500 and NASDAQ are actually down on an equally weighted basis since March the 1st. So not only have they not made progress, they've actually lost investors' money.
And the significance of March 1 is what?
A lot of things started to change in February, right? A lot of things. Some things continued to go higher into mid-March and then shit the bed. Some things had already started to roll over. It's the last 15 weeks. There's no magic, pick February the 24th, pick March the 7th, whatever. There's no magic formula here. This goes back 15 weeks to March 1st. And as you can see here, consumer discretionary really pulling a Rory McIlroy here and really shitting the bed, totally blowing it for everybody. Healthcare also down 2.5%. Industrials down 1.5%. Like I said, on an equally weighted basis, NASDAQ and S&P 500 both down since March 1st. Financials on an equally weighted basis down. Communications on an equally weighted basis down. The only thing that it's actually done well is utilities. Bull market being led by utilities. Shout out Utes. 2 Utes. And technology coming in hot. Technology on an equally weighted basis up 3% since March the 1st. So of meaningful sectors, technology in there. Energy also up 3%. Materials up 2%. Just to put things in perspective, I remember a lot of people getting very mad at me. Not necessarily on this show.
No one's mad.
Although one can argue, people on the old interwebs getting very upset with me. Or getting more defensive in February going into March and April and whatnot. And you know what? All I could say is that I really don't care what other people are doing with their money. I don't care what you think about what I choose to do with my money.
Yeah.
I'm going to continue to do what I think is best. And there's a really good reason for that. It's because I'm the only person that matters. Right.
But JC, you can acknowledge how easy it's been to make money on the long side by just sticking with the leaders these past few months, right? You can at least acknowledge that it's been really easy for some.
But that's called trend following, and that's been going on for over 100 years. So that's not just this year, right? We call that relative strength. It's very important. Asset prices trend. But I just want to reiterate that one more time that I'm the only person that matters to me, right? Just like you should be the only person that matters to you, right? If you think that Strazza is irresponsibly YOLOing some, growth stock, you don't have to do it. That's his problem. And you know what? He's probably going to make a bunch of money on that, right? He probably is because he's got a good track record. But you don't have to like it, right? I guess good lesson. Worry about yourself. It's a selfish endeavor, this whole investing thing, right? I do this for myself. I do it for my family. And I don't really care about the rest of y'all.
So
you're
coming out here saying, hey, since January, February, I've been cautious. What do you call yourself at this point? Like bull market concerned?
Oh,
Like, what's the-
we've been buying stocks. Stocks have been working. That's
I
not the
know.
point. It's not the fourth quarter of last year where just throw a dart and buy anything.
Right. It's
It's a
thin.
different market environment.
Sure.
It's thinner markets.
So
Substantially so.
do you see this leading to a top and your bearishness staying bared up until the top, or will there be a time in this cycle again where you say, yeah, let's hit the gas again?
Well, that's the question, right? So the S&P and the NASDAQ closed at new all-time highs on Friday. Highest closes ever. You know how many stocks on the New York Stock Exchange made a new high last week? 12.
So buy tech stocks, JC. You
12.
don't have to buy those.
On the day that the S&P 500 and the NASDAQ made new all-time highs, then the New York Stock Exchange advanced decline line closed at new 6-week lows.
Yeah, but JC,
Yes, dear?
off of the April lows, the NASDAQ 100, which is an index of 100 large companies, is up 16%. Right? Like things
Nobody's
have
saying it's
really
not.
good.
All we're talking about is the leaders that you're describing have been working.
Yeah.
And that's it. That's all. If you recall, in the fourth quarter in October, when we were buying everything, when the joke was we don't own enough banks, remember? That was literally a joke, like funny, not funny, like true
That trade didn't
in
work.
our team meetings. Okay, this isn't that market. Like small caps were working, biotechs were working, everything was working in the fourth quarter. This
And as
hasn't
it
been
turned
that.
out, JC, as it turned out, looking forward a few months, we owned plenty banks. we owned too many banks.
Well, fine. Listen, it worked out great, but the fact that we were even questioning whether we were long enough was just evidence of the type of market environment we were in October and November. Throw slide 3 in here, Spencer, because here's an interesting one. Because as you know, tech is the most important thing, you know, as Strazza has been lately. Strazza will always also agree how important industrials are to this market.
Huh.
And off the 2020 lows, which was important, if you recall, and the 2022 lows, which we just had the 2-year anniversary of that, industrials were leaders in both of those. Now, here we are, industrials making new multi-year relative lows to the S&P 500. How do we feel about that, Strazza?
Yeah, this is crap. I don't like this. As a bull, I don't like this.
What don't you like about it?
The momentum since April is disgusting. We're looking at an RSI 14 of about 20 right now. So this would be the lowest level since the pandemic lows 4 years ago.
On a market cap weighted basis, the industrials are actually down over the last 15 weeks on a market cap weighted basis. And last week they hit the lowest level since February.
So
on an absolute basis. So these aren't like JC's crazy ratios.
Listen, I'm glad that you
I know
just,
how the Twitterati can get all up in arms about my ratios.
listen, I'm glad that you just specified the cap weighted situation, because I think you know what I'm about to say. Right.
We live in a cap weighted world, brother. That's just what it is.
Here's the truth. While
As
yeah,
it should be.
stop. I have thoughts on this. While we do live in a cap weighted world, you're right. This is the right way to analyze sector strength or sector leadership if you're using the spider ETFs as vehicles, right? If you plan to go and then exercise that thesis through XLI, you're analyzing this the right way. However, if your plan is to then say, look at a chart like this and say, okay, now let's avoid industrials, or say this chart was moving up and to the right, say, I'm going to dive into the industrial space and find a good one, you're not doing it right. This is not really showing you breadth, because the sector spiders are so cap weighted. They're just dragged higher by the largest weightings. If you look at the equal weighted large cap version of this ratio, JC, does it look the same as this? Looks a hell of a lot better. So I would just literally throw this data point out to the wind. This means nothing to me. Unless I want to buy XLI, this doesn't help me. This doesn't tell me about the breadth for industrials. This tells me about the breadth for like the 6 largest industrial stocks.
You know, well, first of all,
this tells me
industrials are actually pretty much equally weighted. The cap weighted sector index is pretty much equally weighted.
Dude, what do you?
There's no stock that's more than 4% of the sector.
That's fine.
On a cap weighted basis.
Look at the equal weight ratio.
I understand. All I'm telling you, but this is what's happening here. We're saying the same thing. No. The problem with both of those, whether it be equally weighted or cap weighted, is that the denominator has a ton of tech stocks and the numerator does not.
Yeah.
That's what it comes down to. We're saying the same thing.
Right. Good luck beating the S&P 500 these days.
Right.
Good luck.
Right, because all these other sectors and whatnot don't have as much technology as the S&P 500, and certainly not the NASDAQ, which is 50% technology.
And it's the narrow weighting of it too, right? It's they have specifically huge weights in the charts that look the best. NASDAQ 100 and S&P 500. So
Here's a good one. Slide 4 there, Mr. Israel. Ready? How you doing? How about that? How about this one?
we knew this was coming. XLK SPY, similar. I mean, semiconductors broke out their relative trend a long time ago, right? So we just keep seeing more and more of this. NASDAQ will be breaking out versus the Dow, all those charts. Like we could draw these massive bases back to the dot-com bubble. They're all blasting off to new record highs. It's tech. It's really almost only tech right now. You can't bet against these companies. And JC's ratio chart of XLI SPY shows you that if you want to outperform or generate alpha, you pretty much have to own these guys. And that's just the market environment that we're in right now. I don't think that, this bull cycle ends and that remains the case the whole time. I think we eventually do get some really nice sector rotation, new leadership. But for now, this is the playbook. Don't change it. Growth over value, tech over everything else.
Go to the next one.
U.S. over international. Mega over
small. Hold on. Go to this. Look at this one.
Yeah.
How come it don't look the same?
I want growth over value in the small cap space too right now.
I mean, it's been an uptrend for 2 years.
They don't look the same because of interest rate sensitivities that really differ down the cap scale. Interest rates mean completely different things to large cap growth as they do to small cap growth.
So small cap value has been able to keep up with small cap growth because rates have been rising.
Because the numerator in that ratio has been weak due to the bond market.
Relatively weaker than the large caps that got plenty of cash and they don't need to borrow money. Screw you, interest rates, basically.
I mean, they could be net lenders and take advantage of those interest rates, right?
Well, isn't that what Nvidia is doing? They're lending people money so that they can afford their products.
They're lending, they're investing. Yes.
Does that sound shady? You're the freak in the spreadsheets.
Dude,
like,
how
is that shady that they are lending their customers money so that they could pay them?
Do businesses not provide credit? This is the most American thing ever.
I'm asking. This is a legitimate question. I'm just a dumb technical analyst. I don't know anything. I see line go up. I'm wondering, you people.
Listen, these are not just very expensive. These are capital assets, right? These are things that get depreciated. Okay. So
what is it that's getting depreciated? Excuse me?
The chips.
The chips
themselves. Right. So they're simply extending credit to their customers. I think that makes plenty of sense. I think that's fine. Well, I don't think it's any. Listen, we could talk all day about something like Affirm, the buy now, pay later stuff. That's a little bit different. That's a little bit new. But these are corporations that they're extending credit to. They should be able to pay or borrow money to pay, right? I don't think this is like, no, I don't.
So it's all good. There's nothing shady about that. Nvidia is not a Ponzi scheme.
You know how sexy it is to come out and talk about accounting issues at Nvidia, right?
Is that sexy? Do you find sex appeal in accounting?
You don't think that's going to draw some attention?
I have no idea. I'm just asking the question.
For the best stock in the world right now? Yeah, listen. I get it.
By my math, it's the third best stock in the world.
There's nothing there, dude. Just look at the company's cash flows. It's absolutely ridiculous.
Okay, but you don't think that's a legitimate question from somebody who doesn't know to somebody who does know? You don't think that's a legit question?
I think it's fair to ask, but I think my answer is pretty good.
All right, last one. Let's end on a good note here. There are stocks working. Spencer, that is your cue. There it is.
That's fine. That's fine. I mean,
sorry. So what do we got here? So we got TJ Maxx, which is for you fathers out there with shopaholic wives. I am one of those. You can own TJX to hedge your monthly TJX bill. She tries to convince me that we are saving money by her shopping at TJX. I don't quite see it that way.
No.
Perhaps she's thinking about it on a relative basis when I think in absolute terms when it comes to the bills, She's like, I could be shopping over there and spending more, but I look at things on an absolute basis, I suppose. A bunch of semiconductors. There's Strazza, Qualcomm, Nvidia, Micron, Lam Research, Broadcom, all of these things. These are household names at this point. Applied Materials.
Good morning.
Spencer, shut up. You're on air.
Doing all right.
We're getting our guest on, as we could tell. See, this is live programming, ladies and gents.
Sorry about that, guys.
Also,
My bad.
Eli Lilly continuing there. Chipotle. How about that? Chipotle. And then Jeff DeGraff, by the way, shout out Jeff DeGraff, guest on the show yesterday, one of my favorites for sure. Talking about how his kids are home from college and they're ordering Chipotle every day. So the kids are still eating Chipotle. I couldn't tell you. I know Chipotle is over at the Israel household quite often because Spencer's wife has a Chipotle issue, like my wife has a TJ Maxx issue. From the sounds of it, I haven't had Chipotle in a minute. Have you, Strazza? Do they do that in Key West?
No.
All right.
I've eaten at Chipotle so few times, I wouldn't know how to order like what I was doing if I walked into that place.
When it first opened, like back in the 2000s and stuff like that, and I was working in the city, like I'd get it for lunch quite a bit. Like their salads were really good, I thought. Like protein salads.
I don't even remember. I've eaten it so few times.
I enjoyed it, but I had to move to California and like met so many Mexicans at the time. So like I didn't really know what Mexican food was. And I don't think that I've had Chipotle since after 2015 when I was introduced to real Mexican cuisine.
Yeah.
So I don't know. I think I should try it. I think we should do like a Chipotle, Cava. Like there's certain, like I went to Texas Roadhouse and I was thoroughly impressed.
Chipotle's, you know what it is, Steve?
Yeah.
It's everyone under the age of like 26.
Yeah.
Right?
I stay away from these trendy places. I'm really good at avoiding.
Chipotle's trendy.
Oh my God, JC, Chipotle is like the trendiest place there is.
They definitely
2024. Chipotle is still trendy.
Yeah, man.
Post.
Dude, we went like I don't know 3 weeks ago on a Friday night, and we were the oldest people in there, and it was all high school and college kids.
Wow.
Go get a real meal.
Wow. For the record, Chipotle is a real meal. You're getting a balance, you're getting what you got. It's a real meal. I would it might not be great. I don't know. I haven't had it in a minute, but it's real.
When you're in New York City or even anywhere in Connecticut or New Jersey, like Mexican's going to be really low on your list. You're probably not going to end up at a Mexican fast food joint. You're going to end up at the deli or somewhere fantastic. And
you're smart.
Yeah, there's just a lot of better options. So we didn't frequent it too often.
Well, right. That's what's on my mind. We got a great guest on. Let's hit it.
Wait,
I gotta go get.
You didn't even mention the happy birthday, or did you? It was so quick.
Whose birthday?
The bull market.
Well, you mentioned it.
Yeah, I thought. Yeah, I mentioned that you were going to mention it.
Yeah, yesterday was the 2-year anniversary of the bull market. We know. Line go up. Let's go.
Second birthday, it's not special anymore. Who's
right?
Even
exactly. Like for my kids' first birthdays, we went all out, open bar, carving station. Yeah. For the second birthday, we're ordering some pizzas and inviting people over.
There you go. That's
what it is, Spencer. You'll see.
All right. Second birthday is not important. Today we all learned something. All right, let's bring on our guest. New guest, Matt Caruso, Caruso Insights, at Trader Caruso on Twitter. We'll bring him on and guess we'll see what he's watching because that's what we do here. So where's my bumper? There we go.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Matt.
Hey, good morning, guys.
Hey.
Pleasure to be on.
How we doing?
All right, so coming in on a Monday morning, Matt, talk to us. What are you watching? What's your process like? What do you do when you get to your computer in the morning? We got no economic data today, no earnings, nice and quiet, kind of how I like it.
It's a quiet day.
Yeah, especially when we had, I think, Wednesday's off. I was surprised by that. I didn't realize this week we had the Wednesday off, so it's going to be a bit of a quiet week. But now this week, it's kind of interesting. I mean, we're not going to, I'm sure you guys have been hammering on the small number. I've seen JC tweet about how so few stocks are making new highs with the bull market. But what's going to be really interesting to me is how Nvidia finally, how the market acts when Nvidia finally takes a pause, a breather. And actually, international has been interesting because, not only there's been this big dispersion in the U.S. markets, but a lot of European markets, even Canadian markets, were hit pretty hard last week. So, do we have that like economic weakness widening under the surface? That's going to be something I'm going to be watching very closely.
because lately it's been a tape whereby the broader market is not doing well. I'm seeing a lot of red on my screen, right? Most industry groups are lower. The advanced declining issues looks terrible. Something like last week, I think the market was up 2 or 3 days and we had like 400 declining issues on the S&P 500. That's not sustainable. But the way it's worked, and the reason it's worked, is because Mag 7's been fine. The $3 trillion club is just slowly dripping higher. And then you get a big earnings beat from a Broadcom or an Adobe. You throw that in, and it drags up the NASDAQ 100, drags up the S&P 500. And it really masks what's been pretty nasty beneath the surface, no?
Yeah, and I think there's a few things that are also pushing that to a bit of an extreme. So if you think about it, like I think people underestimate like the stress of performance chasing. So if you're someone who says, I have this portfolio and everything's going down except Nvidia and Apple, and my clients are calling me saying like, hey, dummy, how come you're not an Nvidia or Apple or Microsoft? There's that push in, and as well, I think the economy is starting to slow. You're starting to see that again, like I said, internationally, different areas. The normal place is, if you're a little bit worried, is that you want to push into very liquid, large cap stocks with a great business model. So it's kind of like all roads are like leading to these stocks right now in the short term. You're getting the performance chasing. You're getting anyone who's a little bit worried about the broader economy. They also have they do have a white hot fundamental reason for going up. I mean, the whole kind of AI case. So whereas other people maybe aren't seeing that kind of growth. So they kind of have these like three pillars of just like this big sucking noise of like taking capital from everywhere else going into these stocks.
Yeah.
Ultimately, when you're a combined group of $9 trillion, at a certain point, you actually hit like a physical limitation. Like if it's a $10 billion stock, like let's sit down, tell me the story. Why is this a $50 billion stock? But when you're a collective $9 trillion group, it's kind of hard to sit back and say, oh, we're going to double or triple from here, because now you're talking like $18 trillion of additional market cap. So at a certain point, the numbers make sense. But in the short term, they have, like I said, they have these multiple tailwinds all pushing the same way.
Steve, it's what you always say. The mega cap is safety, right?
It's people basically use them. You're talking about chasing performance. Sometimes too, when we get like a corrective wave or like a cautionary period within a bull, they just park cash in these names. You see it with Apple, you see it with Microsoft, and then it becomes like a source of funds. And you'll see interesting stuff where like Apple's down big one day, but the rest of the NASDAQ 100 is like completely lit up. You just see that money rotating. So I think that's great, right, during the middle to later innings of a bull market. But this is really how parabolic trends happen. This is the dynamic that you're explaining. Everybody pours in, right? And then eventually there's nobody left to buy it because everybody's in these trades because they have to be. We talk about if you're not in the Mag 7, what are you doing? There's no alpha there right now, at least the past few months. What happens then is you get a parabolic blow off top because everybody hits the exits at the same time, right? And then those same dynamics flip on their head and everybody hits the doors and you get nasty blow off. But until that happens, get in while it's good, right? So
yeah, you can't fight that. And it's interesting too, because if you step back and you think, when was the last time you saw Apple this persistently strong? I remember it was the exact, and I don't think we're going into a big bear market like 2022, but the last time you saw the same extreme dynamic was late 2021. For a good like month, Apple was up every single day practically, just like powering higher. And again, internally, you saw all of this weakness happening. And so like the indexes were masked. The Dow had, I think, United Health. That would, it's price weighted. It was the highest, one of the highest price stocks. That was keeping the Dow up. On the Nasdaq side, it was Apple. And so these dislocations happen in the short term. I think it comes down to like if you're a buy and holder and you're just holding ETF, you really don't care. I mean, it doesn't matter who's bringing it up as long as someone's bringing it up. But I mean, if you're an active investor, then it's an extremely important situation you got to deal with. On Friday, I think it was like 80% of NYSE issues were down. So it's hard to kind of be around, screaming, let's go. And when 8 out of 10 stocks are on the downside. So it's an interesting dynamic. And what's going to be really cool to see, like you spoke to rotations, I think that's the key, because obviously these stocks, even if it's a normal pause breather, they're going to pull back down to a 21 exponential something, in every normal uptrend. Right. When that happens, do other stocks take the torch and we see some strength? If that's the case, the underlying market's still healthy and we see rotation. If everything else breaks badly, then that to me is this is a safety trade going on, and either we're going to mega cap or maybe fixed income. And then I think that the market's going into a bit of a deeper correction for a little bit of time.
Now, will you look at, will you look for like supporting evidence to see if people are really playing defense and it's like a safety trade sort of an environment? Will you look at staples relative, utilities relative, low vol?
Well, so there's a weird cycle, right? I mean, a lot of utilities have been strong because of the whole AI trade. So it's like that's kind of a that has been strong. I mean, up until recently, I didn't check the stats lately, but I think utility was the best sector year to date. So it's kind of an odd, another odd kind of spin to this market environment.
I need a utilities XAI index so that I can get this data back.
Yeah, exactly. Yeah. No, but I look around, like I put a lot of focus on breadth and a lot of focus also on fixed income. Like, I think last week was also telling bond prices were bid, but it didn't result like the normal dynamic past couple of years. If bonds were moving up, you saw strength come into stocks. Instead, this time you saw weakness.
Yeah.
So to me, that was a little bit more, finally, so like that was concern from investors' point of view that it's less a Goldilocks landing and more like the economy slowing.
There's been a bit of a dislocation just between dollar and interest rates. I don't know, just in June, 2-3 weeks now, right? Where dollar's still pressing towards the upper bounds of its range, looks pretty good. Rates rolled over in a pretty, significant way last week, and market breadth was terrible. Sure, the indexes were making new all-time highs, but we just talked about that, right? Usually when rates are rolling over like that, if I'm looking in 10 years down, 10, 20 basis points in a session, there's green all over my screen, right? The bios are up, the banks are up, real estate's having a great time. Not last week. So I don't think that's, how do you interpret that?
Yeah, so the dollar's an oddity. For years, like when I was a market maker, I'm in Canada. Most of my stocks were like gold stocks, so I know like the whole monetary space well. And so the dollar is weird because the dollar is also impacted by international flows. So like most of everything we do, we're always like North America, Canada, US. But when you get to the dollar, you have to look globally. So I think like what's setting off that weird dislocation, because you're right, like normally that's the relationship, but if we're facing again broader like global economic weakness, which again, I think France was down 10% the past week and a half, Germany 6-7%. So then if you're seeing like global weakness, it's not so much just that US interest rates are coming down. It's like there's bonds are bid everywhere, and again the US dollar becomes attractive when there's like international concerns. So that's why like I think last week was a bit of a major shift, a major subtle shift of investors worrying more about economic slowdown than inflation or anything else. And that's really kind of what we saw.
And it's being driven by developed Europe, you think? This isn't just like election stuff and geopolitics?
No, I think Europe, I don't think it's driven by Europe. I think the US is the driver, but I think that Europe is kind of a little more the more sensitive space. Like, Europe, you can almost think of it. There's a terrible comparison, but think of it like the US market XAI at the moment. There's industrials and robotic, but there's no, the US markets is lit up because of AI, and Europe doesn't have that. So I think, the Russell 2000 has been terrible. If you look at even the everyone's lagged. So, I think Europe is just a pure view of what the market would be if ChatGPT was never released into the world, kind of thing, So
it's also just tech in general, right? Like from a weighting standpoint, Europe is more the Dow or small cap Russell 2000. A lot of these countries have literally 0% tech in some of their indexes. It's wild. So it's not like, the allocations we have here. We talk about the S&P 500 or NASDAQ going up every day. It's because like 40% tech.
Yeah. It's pretty wild, actually. It kind of dawned on me at the same time because I trade my own book, and so I don't have like concentration restrictions. But I was just looking at like at the weight of the top three, just the top three now. I think it's 25%. I was looking at, and if you're running even most hedge funds or mutual fund, like your concentration limits usually don't even allow that. So even if you want to mimic the index, it's like your own personal concentration limits will say, hey, you can't go have three of your stocks represent 25% of your portfolio, but the index as a whole is weighted like that. So it's such an odd dynamic that really, so I have clients saying, Matt, have you seen this before? I'm like, no, the market's never seen this before. It's really a unique setup.
Matt, is that alarming for you, or you're cool with it?
Well, it's like, look, this is the dynamic we have. I think we're in the midst of like a technological revolution, like the 90s with the internet. And so I think this is the first wave where it's the infrastructure move. So if you look at early 90s, all the big movers weren't, Yahoo and the rest. Like those were like the consumer facing end of things, like the fun, interesting stuff, like where we got to enjoy the internet. The first moves were a lot of the Ethernet cables going out, mainframe to PCs to laptops. So I think just the interesting point of it, of what's going on now, is that whereas in the 90s businesses were less less concentrated. Like Apple has their hands in so many things already, or Nvidia was already touching so many industries. And then they also went and grabbed this brand new tailwind, which in the 90s didn't really happen that way.
Yeah, remember when Nvidia was a crypto stock before we made it an AI stock?
It was a gaming stock, crypto stock, AI. It just keeps rotating. I got to give it to Jensen. He's on every single trend that he could possibly. He's the ultimate trend trader.
It's incredible. Yeah. It's really incredible. All right, so how are you positioning into the back half of the year? What's the playbook?
I think we're going to be soft into summer. I mean, usually summers are not a great time to trade to invest trade anyways. But this for me is really, it's an alarming situation. So like the way I go about this is I put a lot of focus on not just what are good setups, but I always ask myself from a portfolio perspective, like how aggressive should you be in this environment? If you just ask yourself, because most people it's always the two extremes, right? Either dead bears or crazy bulls. And for me, it's just about like, look, you have to have a good cash component if you're an active investor, because most stocks are going down. So play key themes until they break, which is what I've been doing and trading softly. And once that Nvidia move takes that pause, we see it. If we have broader weakness, it's like stay cash, enjoy the sunny weather. And if we get a rotation, then it's about kind of, okay, let's push into those rotations more aggressively. But I think personally, I mean, we always want to interpret versus predict, but looking at the way internals are acting and the way I think there's some climactic action in the leading spaces, I think we're probably soft until this regular seasonal September period. I think we get a lift after on elections, new hope, interesting ideas. Regardless of which party wins, people are going to hope there's new ideas that come around to kind of get things going. And then I think coming from there, we start to see the tailwinds of AI start to broaden into new names, and we get another whole leg to play again.
All right. So if we could sum up your mood, I think it sounds like you're like cautiously bullish. Is that fair to say?
In the short term, I'm cautious. Long term, very bullish. But in the short term, I think we're at the we're in the ninth inning of what's been I mean, I don't know. Do we go into a 20% bear market? Do we make it 12%? I'm not like the predictive kind of guy, but I think we've already begun a correction under the surface. It's just a matter of when is it reflected fully in the indexes.
So a deep corrective wave, maybe something like July to October of last year, wouldn't surprise you here.
Yeah, exactly. Something like that would I think would be very appropriate. Yeah.
How much are you weighing, some of this international weakness when you think of U.S. equities? Like when you take that breath, are you just talking about the U.S. or are you also looking around the world and saying, Europe's falling apart, Asia hasn't been good? Does that weigh into your breath judgments?
Yeah, because I mean, we want to look at international flow. So I'll always start U.S. Like I just trade U.S. markets. So yeah. I'll have all of my indicators and data I look at, but sometimes you get conflicting indications like now, right? Like we have this bad breath, but the indexes are fine. So now you have to sit back and tell yourself, okay, what's the story? Just like last year when the Qs were strong in the middle of a banking crisis, well, what's the issue? We figured out AI is this whole new thing and all the rest. So trying to find that kind of confirming evidence to kind of push you on either side of the fence, you look internationally, you look at Canadian markets, you look Chinese markets. I mean, the Fed went from 0 to 5.5%. I mean, mortgages went from 2% to 7, 8, 9%. So maybe that's finally taking an effect. And the Fed's always late. The Fed ultimately always follows the 2-year yield with the federal funds rate. So the 2-year yield's coming down. So they're late again, just like they were late to hike. Maybe that economic weakness is coming. From a Fed's perspective, they don't care about the markets. They just want to get their two jobs done. And if they come in 3-4 months late, they've said in the past they would rather things break a little bit because it's easy for them to fix. They can always give a shot of adrenaline if they want, but inflation's very hard to put back into the bottle. So they would rather err on the side of breaking things a little bit.
For them and what they do, being early is the bigger risk. Being too early
Absolutely.
is a far bigger risk for them.
Yeah.
Yeah. So what do you see from the bond market? Do you think then bonds might be a good position, or rates can meander and do a lot of sideways before finally coming in?
It's hard because I'm a trend follower at heart, but to me, it looks like bonds are trying to put in like that higher low and trying to finally make the turn.
Yeah.
I mean, we started to cut in Europe. We cut in Canada. The Fed is going to cut later this year. I think with economic weakness. So you have a bunch of kind of tailwinds, both like on the short and longer term, that are going to start to become favorable, I think, for bonds. Yeah. And that would be great too, because again, the intermarket, usually bonds move first and stocks move second. So if bonds started to get a bid for a couple of months, then that would actually end up supporting the market come August, September. So I think that would kind of line up well.
So if you do start to see this in a real way, right, we start to see bonds rally, rates really start to come off. What are the groups, right? What are you looking at? Doesn't the playbook change a little bit? You start to look at the banks and the real estate and the speculative growth a little bit more closely.
Yeah, that's where I think. I mean, I've been a little bit off this cycle because I thought this was going to happen earlier. Like I thought, inflation's coming down. I thought it was going to break a little bit quicker, and so that kind of stickiness has been a little bit kind of frustrating in that respect. But I think that's definitely the playbook. I mean, if you look at growth, like more speculative growth, I mean, it's been dead for 3 years. It hasn't budged. I mean, like I hate to use ARK as an example because it has this, some its own flaws in design, but just as a barometer of like a broad based group of like speculative growth stocks, completely disconnected. So I would imagine those start to come more into play.
People don't like it. They don't like that this is the answer, but there's really no better barometer for that group of stocks. We want to know what the trashiest, highest multiple, unprofitable tech companies are doing. That's a great basket for that. Like, thank you, Kathy Wood, for giving us this.
Yeah, the only thing is, I hope she'd update it a bit because I haven't followed lately, but I know she had like Zoom in there and stuff. So like even some stocks that were high growth, like the growth is even I don't even know why it's still in the basket. It's just a hope trade that it comes back kind of thing. But I mean, at least if you were cycling into new high growth stocks that are failing, at least you're staying on trend. But it's like she just stayed stuck in the old ones kind of thing, So that's the interesting.
That's an interesting point. I also, like you, I have not looked recently, but I think the way she defines growth is different than like how we define growth. She's looking at like 5-year horizon, right?
She's looking at 20-year horizons. It's
20,
great.
sure, yeah.
But somebody's got to know. They have the worst pandemic hangover still, like Matt's saying. They still got Peloton and freaking Beyond Meat and Zoom in there. It's
perhaps
Teledoc.
Yeah, exactly. So I don't know. It's so hard to have a 20-year view. I know. Like people always kind of go back and say, "Oh, if you just bought Apple 15 years ago," or how fast. I've been trading professionally since 2008. I first got like into trading 2003. Just like in my professional career, how many times I've seen the next big thing come and go already? Like it's mind-boggling how many times I've seen it come and go. I mean, ChatGPT came out a year ago, and how many businesses is that going to like knock off the mat? Like, I was using Grammarly before to kind of write stuff. I mean, why would I use Grammarly and pay, I don't know, $300 a year when ChatGPT can kind of do everything and 100 times more? So
this time last year, Grammarly was great tech. Revolution.
Yeah, exactly. Yeah.
Now we don't.
The other thing about holding a stock for 20 years is you have to endure your fair share of drawdowns. How many among us can withstand a 90% drawdown, right? I mean, it's hard.
I agree.
If there's one thing we learned from participating in the markets over the years, it's that there will be plenty of opportunities in the future, right? More opportunities.
I know there's like nice bull market, and you guys are talking 2-year bull market, but to me, like the way I've always operated was the market really has these 3-4 month cycles, like these explosive 3-4 month cycles, and they pause. And then after some stocks continue, some new names come out, and you have another explosive 3-4 month cycle. And if you could just get one of those 3-4 month cycles really right, even every 2 or 3 years, you'll like outpace indexes because the moves in the individual names are so incredibly outsized.
Absolutely.
So the real secret is just like don't blow yourself up when conditions are not right, and you're gonna get another fastball. Like another nice pitch is coming your way. So you just have to be able to stay in the game and not mess yourself up and know what you're looking for.
I love that, Matt. I think that's such sage advice. I mean, I always like to say, make hay while the sun is shining, right? And then preserve your capital and just survive the other periods. If it's a messy market, if it's a bad breath market, and that doesn't work for you, it doesn't work for most people. It could be tough to trade in. Just sit back, take some money off the table, and then go and press the gas at the right time. I think that's trader wisdom right there, my friend.
Matt, you're one of the very few people on the show who've been on the show who are both a CFA and a CMT. Which do you use more on a daily or weekly basis?
Ooh, the $1 million question.
To be very honest, I use CMT far more with markets. So it's they're both amazing degrees. You learn a lot of stuff. The CFA helps you understand like how everything works together. Like it helps you understand the machine better. But in terms of applicability, if you're an active investor, to me, the CMT takes the cake for active investing. It's kind of like a no competition, but the scope of the CFA is much broader. So it kind of depends what you're trying to do.
Yep. Like, how do you manage risk if you're a CFA?
Well, you gotta play the diversification game. I mean, there's a lot of different things you can do, but if like the way most people will trade, swing trade, position trade, like that environment doesn't lend itself to like CFA. Like, I mean, also the CFA doesn't really teach trading systems, right? So they tell you about like all the different elements of the market, like so. Like, how accounting works, and there's some really dry chapters like pension accounting where your eyes kind of fall out of your head and the rest, but it's really understanding how everything kind of really works together. But with the CMT, you can build more of like a trading system type of approach because you understand, you get to understand the market, not just finance. So I think that's the difference.
Yeah. And then, we're not throwing shade at the CFA at all. I think the CFA, like knowing that language, and that's really the way that the majority of other market participants are approaching and viewing the market. So understanding like where they're coming from and what they're thinking, the valuation models that they have going on in their heads, I think also really helps, right? So just having that knowledge is a very valuable skill set.
One thing that I find has really changed, and the CFA helped me like an incredible amount, and I really wasn't expecting it because like they teach you like how to calculate bond prices and all this other kind of stuff. And if you go back, like even when I started my career, like it was much simpler. Like I was trading with guys from the floor. We were in like the market, so I mean there wasn't like financial sophistication like there is now. But with algos and HFTs, like financial engineering, how everything is linked, has gone to a whole other level. And so by kind of being forced to go through all these like bond pricing and stuff, that's how like I actually understood mathematically like why do speculative growth stocks like go up when bond prices, like how is that a link? Like why would I care if I own Zoom, let's say 2 years ago, why would I care if bond prices are going? And so like you learn like the way the system operates versus just
they're literally machines that see, okay, rates go down, ARK go up, and then they make sure that ARK goes up because they're buying.
And I mean there's a mathematical like reason behind it, which in the short term kind of makes sense. Ultimately, if they have bad stocks and that portfolio doesn't, but I won't go into all the math of it all. But I mean, there's a reason why it would operate that way.
Well, Jeff DeGraff was on here last week, and he made a similar comment, and he said it probably just went by most people. But he said if you get those D's and G's just a little bit wrong, the valuation can be wildly different. What he was talking about is the discount rate and the growth rate, right? So there's two like key inputs in any valuation model that. Man, if you're modeling for 5% risk-free rate and it comes in at 4, what do? You just totally whiffed, and that stuff is hard to model, and we know that as technicians. So it's a tough game to play.
Yeah, 100%.
We're about to open. Before we'll let you go, but before we do, Matt, you said you were a market maker back in the day. Do you have any good floor story for us?
Where were you making markets?
In Montreal, here in Canada. So we were already on the desk, so we weren't on the floor. They had brought it up to the Canadian market closed earlier, like in the late 90s. So I wasn't on the floor. I missed the floor.
Damn.
All right.
Oh well.
Cool.
Well, one good story is I was trading, and where if you're passive, if you put a bid, you get paid by the exchange, like for placing that bid. And anyway, so I was trading like crazy the main Canadian ETF, and like I was having like a 5-figure day just in like exchange rebates. And so at the end of the month, I go, to check my P&L, and like I'm missing like a nice big chunk of change. She's like, "Oh, you didn't realize like we don't pay that on ETFs." I'm like, "What are you talking?" So like that. So that day where I thought I made this like boatload of money over like 3 hours in the zone, I ended up taking small losses because I thought I was getting this exchange rebate. And then after they said, "Oh, that only applies to stocks, not ETFs." And I was like,
"But they pay rebate income these days on ETFs, right?" Oh, that's terrible.
Yeah, no, now it changed. Like 7 months later, it changed. I'm like, oh. Like you cost me like some serious money from a really good afternoon if I would have known that. So, anyways, that was a fun, not so fun story.
All right, guys. Matt Caruso, the link to his site, link to his Twitter, they're both in the description. Recommend you check it out. Matt, thanks for your time today, man. This was good.
Thanks. Let me know. I'm happy to come back anytime.
Awesome.
Do it. Thanks, Matt. That was a great conversation. That's fun.
Yeah. Always great to get some new perspectives, new voices. Actually, speaking of that, we got a lot of new voices on the show coming up here. I mean, we had Jeff DeGraff on Thursday.
Tell us
who's coming up.
Yeah.
Tomorrow we got Greg Harmon on the show.
Nice.
No show Wednesday. Market's closed. But Thursday we got Peter Pinkasov on the show.
Oh, okay.
We got Jake Wojastik coming on next week. We got some new blood. We got some fresh faces.
Jake on? We've never had Jake.
No, I've been trying. Literally, I've been trying for like 8 months to get this
Jake's
guy on.
tough to get. It's got to be like only on Tuesdays and like every other Friday. Jake's a busy guy. He was in
He's a busy
Japan
guy.
recently.
I get him on here. We've been on here tomorrow.
Yeah.
All right. That's great. When we got Ian on in like 10 minutes.
Yes, we do. So 9:27. We're not quite open yet. Do you guys want to go over the hot corner? I think we should, because we're doing a special stream
Yeah, let's
later
do
on
it.
today
Hit
that
it.
we should probably talk about.
No, Spencer, if you want to do Hot Corner, we could do Hot Corner. I love Hot Corner. I could talk about it all day,
All
baby.
right.
All right.
Let's do the hot corner.
Go.
So hot right now.
Okay. First of all, announcement for those of you that follow the mainstream media and read the Wall Street Journal in the morning. We're not missing these, right? So we have a process for catching no filing positions, right? So something like Jeff Smith and Starboard Value, I find it very interesting, the $500 million stake that they're reporting in Autodesk this weekend. Autodesk has had some filing issues, some accounting issues, right? Some regulatory stuff going on there. They're going to come in, maybe clean things up. They're some of the best on the street at it. We're going to get these names that are pre-filing. For example, we wouldn't find out about that if they didn't leak it to reporters until a 13F filing came a month or two from now, right? So we're going to add names like this to our list. Now, we have 3 big ones on top of that today. Pro Kidney Corp. We talked about this one, Spencer, back around probably Christmas. This one had like a 50% short interest back in the day. It was basing really nice in Q4 of last year. I got involved. That second red arrow, it did not work. Let's just say it didn't work. But now some momentum has come into the name. It's been squeezing 54 million, JC, from a director. 54 million as the stock's coming out of this base with a 45% short interest and 11 days to cover.
Whoa.
Does that stand out at all?
Yeah, and look at where this is happening, right? Look at all that former resistance from the end of last year, right? We ultimately tried to break out in the spring. You know, false start, finally got going, absolutely ripped. Now retesting those levels successfully, I might add.
He's buying the retest.
And then, so who is this? Pablo
Legarreta.
$55 million. Like, that's not nothing. I don't care who you are. Like, that's a lot of loot.
He's on the Forbes 400. Mexican-American billionaire, founder of Royalty Pharma, the world's biggest acquirer of pharmaceutical royalty streams. All right. He's a cash flows guy. All right. I like it. So Pro Kidney, though, is one of these GLP-1 shorts, right? It's a
GLP-1 short?
Yeah, right. So this is on the short basket. If you're long Lilly and long Nova, then you short the ones that like do diabetes things.
Oh, that would make sense. Okay.
Right? So if you look at the left-hand side of this screen, that was GLP-1s. And now that's kind of behind us. And the ones that got absolutely decimated because Lilly and Wegovy are going to solve obesity forever are now bouncing back, right? So that whole sell-off is completely thought out. And now we have some reversals and we're heading in the opposite direction. I find those trades very interesting. Even you keep it simple. Some of the DaVita company, the dialysis companies were rocked pretty good. So this falls into that basket. All right, what do we got next? Back to the table. We have to talk about Adobe. We're going to skip SoFi because
I could purchase.
It is
SoFi.
a purchase, but guess what?
What?
Flip up the Adobe chart. What was
Tommy Tuberville at it again.
That's
I love it.
purchase.
This
for sure.
guy. This
Right.
guy.
Tommy
Junkie Tommy Tubbs.
Tommy Tubbs, is probably watching our show right now. He's in Discord rooms talking about, altcoins. He is on top of the market. This guy is a freak of a trader. So he bought the weakness in Adobe. He bought the strength in Adobe after the earnings beat. It seems like this is not why Adobe really stands out. Adobe is coming back to me.
God bless him.
Yeah.
God bless him.
He was
buying all those research. He was buying like lumber futures. Remember before, he was buying, like, this guy was out of control and nailed it. He was buying cocoa. Wasn't he buying cocoa really early too?
This guy is so on trend. He's the only congressperson we've seen file for Bitcoin too. Like he's in it. Futures markets, crypto markets.
Texas? What's that guy in Texas?
What?
There's a guy in Texas. He's like a hardcore Republican. Is it Ted Cruz?
Ted Cruz?
Yeah, Ted Cruz.
Yeah.
Didn't he buy Bitcoin too? He's not in Texas? I don't know, man.
Isn't
No,
Ted
no,
Florida?
I don't know if Ted Cruz bought Bitcoin.
He's one of those Florida, Texas kind of states.
Oh, Ted Cruz did buy Bitcoin. You're right.
See?
You're right.
Come
You're right.
on.
Okay.
The old man still
All
got it.
right.
Listen, let me talk about what's
So
really.
those are the only two? I find that hard to believe.
We can go back and check. It really doesn't matter to me though. The CFO bought like $5 million worth of shares at the lows almost 2 years ago, right? So that really stood out. When we see these big CFO buys at bear market lows like this, we put them on our list. We leave them on our list. Adobe looked like it wasn't just doing a hard retest, but a few weeks ago before it beat earnings last week, it looked like it was about to fall back into the box. Instead, it dug in, right? Defended that range. Looks like the primary trend is still higher. I have a feeling we might write a special report about this one soon.
No, it's interesting because, I mean, obviously, I'm much more interested in the fact that the CFO bought a ton, literally at the bottom, than Tommy Tubbs down in Alabama YOLOing some Adobe. I mean, you know what I mean? Like, right?
And you know how I feel like with a company or a name like Adobe right now, I want the mega cap growth stocks that they're saying missed AI or missed this or missed that, right? I want the mega cap growth that the market doesn't want over the short term, because those trades have worked really well this whole cycle.
For sure. And then here's the other thing I want to mention. Like, all this stuff is great. Like, all right, Tommy Tubbs YOLOing this, and then the billionaire buying the biotech. Like, all that's great. Like, we want to know that information. And in my opinion, the reason I like that is because what it does is it has us look at this stock a little closer, right?
That's right.
What are they seeing that maybe we're not seeing? And do we agree with that for our perspective, from our risk tolerance, for, you know, the fact that we're just trying to make money and we don't want to be sitting in this thing? Like, some of these CEOs, they'll buy a stock and they'll be sitting in it for years because they're like, I'm going to be here anyway, all good. I think this is good value. And
Yeah.
it doesn't necessarily mean we do, right? So that's where the timing comes in. That's where the technical analysis comes in. I know, Spencer, you got that link. I know people are asking the video from last week.
JC, you make a really good point, right? So the CEOs or CFOs are great at knowing that they're getting a good price, but they're buying downtrends most of the time. Anything like this Adobe example is a perfect example. He's stepping in, he's buying a downtrend, right? He thinks, wow, the stock is so cheap, probably doesn't go much lower than this. What he doesn't know, and knows that he doesn't know, is when a new uptrend is born, right? So they're literally catching falling knives. They're buying the ugliest looking charts, and that's great information for us.
Yeah.
A lot of times we'll look at that and I'll say something like Adobe, this was literally falling off a cliff.
I'll tell you what, Strazza, they need a technical analyst on their team. And I am convinced, I swear to God, I'm convinced that Warren Buffett definitely has a technical guy.
I think
because
so.
and I'm convinced that Carl Icahn does not. Right? You see? You see the difference?
Yeah. The point I'm trying
Hold on. One more thing that I wanted to mention. Sorry, Strazza. One more thing I wanted to mention. Spencer Israel gave us quite the compliment.
Why?
I don't know if you heard.
No. What do you say?
Spencer Israel said that this was the best presentation about SEC filings and the best explanation of how to use these filings to make money that he's ever heard, ever, even by us, by the way.
I did say that. Well, look, you guys have given a number of these presentations over the years, but I thought the one from Thursday, and I just put the link in the chat. It's also at the very top of the description right there on YouTube. I thought the one on Thursday was probably the best one you've ever given, just in terms of the detail and the explanation of the process. And it's not, we talk about these stocks every day on the show, right? Oh, it's in the hot corner. Cool. Here's a chart. But we don't really go beyond that, right? And this time you guys really walk through the process, how a stock gets to be on the hot corner, and then B, what you do with the information, because getting on the hot corner is really just one step of a larger process of making money, right? Using this to make money.
You know what drives Strazza crazy? When people like on the internet are talking about this purchase, and Strazza's like, who even cares? We don't look at that stuff. That doesn't matter. That's old.
Yeah.
Like, what is the filing that's like 45 days later that PTJ and these guys file? What's that one?
The Fs.
The 13Fs. So these are on a quarterly basis. By the time these things hit the wire, there's a very high likelihood that they are not in that position anymore.
And I'm guilty. I am guilty as sin of what JC is talking about.
It drives Strazza crazy. For me, I find it funny. Like, it's such a distraction.
Like, I won't name any names, but there's an item on our list this morning that it fits, it meets our criteria, but we're not thinking twice about it because I know for a fact it was a mistake.
It was a mistake.
Yeah, it's a mistake.
Strazza catches those a lot. He's like, this doesn't make any sense. This has to be a different kind of filing. And then 2 days later, they do the thing, right?
Compliance is getting yelled at this morning that they were over 5% in this name. They try so hard.
Strazza's such a ball buster when it comes to this accounting stuff. You see that? Because he
Well,
knows.
listen, Spencer, that's really nice, and thank you. But at this point, we should be able to really give a master's class in this. Like, we really should. We've been doing this for so long. I am no stranger to SEC reporting rules. It's how I started my career. So, like, these reports, these filings, digging through it all, like, this is what I like to do. Like, these things are my babies, these 4 and 4s. Like, I have such a good time. So
I would say this.
Communicating what we're doing better. What?
I thought I knew a lot about SEC filings. I thought I did. And then I met Steve and I realized, oh shit, I actually don't know anything about this stuff.
I spent years.
You do now, though. You know now.
I spent years nerding out on the Edgar database until 1, 2 o'clock in the morning. Just, long nights with the SEC filings. So
hold on. I'm going to tell the story quickly. Strazza has heard this stories a million times. I bought Six Flags. It was my first big winner of my whole career. I'm 22 years old. I buy Six Flags, PKS. Ultimately, it changed its ticker symbol to SIX, I think. But it was PKS at the time. $3, $3.50. Dan Snyder, owner of the Redskins at the time, filing 13 Ds left and right. This guy's going gangbusters. I'm going in there with him. Stock goes to 12. I'm a hero.
Is that
I'm the next Warren Buffett, right? So then there was another outfit filing 13 Ds, I forget, on Magna Entertainment. It was a horse racing stock in Maryland. You might be familiar. They own a bunch of those Maryland racetracks.
Is that
filing 13 Ds left and right? I'm like, I'm going in there. Stock gets cut in half. I'm like, this is not a good strategy, right? I went from thinking I'm the man to this is terrible.
Yeah.
And that's where the technical analysis came in, because I wasn't using technical analysis for Six Flags. I just got lucky, right? Let's call it what it is. This was over 20 years ago, but I just got lucky. I got lucky. In the next one, that's probably what I deserved. Got cut in half. You know why? Because there was no technical analysis.
That's right.
I was just buying because these guys were filing 13 Ds, and I thought that was good enough. These guys are smarter than me. I'm going to follow them into it. No, stupid. And then I started learning about technical analysis and trend following, so that when Chesapeake Energy came out, and Aubrey McClendon and Tom Ward are filing 13 Ds, not filing, they're filing 4 and 4s, excuse me. Strazza's like, JC, they were not filing those things. This is the president and CEO. They file 4 and 4s every day together, every day. 2,000 shares, 3,000 shares, 10,000 shares. Spencer, it was unbelievable every single day. I don't think I've ever seen that since. And this was like in the 12, 13, 14 bucks. Stock went to 77.
Yep.
77.
Well,
trend following.
So the honest truth about this data set is that you can't use it in a vacuum.
Mm-hmm.
You can't simply take, even if you know, right, 99% of the filings are no good, right? But even if you can identify that 1% of filings that really matter, either you're going to follow all these guys in and they're going to miss. That's the truth. Half the time these guys are wrong. Or you're going to be stuck with some real opportunity cost because you're buying these down, right? So we're happy to be in, JC, 20, 30, 40% later after the insiders, because we're confirming that the trend is turned. And
here's how I like to look at it.
We're not trying to buy at the same price as them. We're trying to buy a little bit higher.
This is important because the most important part of this is that we're on the right side of the trend. That's the most important. It's always the most important thing. Right. I just want to reiterate that this is no different. But here's the thing. I like when there is an underlying catalyst in that particular name. Yeah. And not a catalyst like an event or earnings or a partnership, not a catalyst like that. I'm talking about a catalyst when it comes to the mechanics of the market and how the market works. Yep. There's a reason why we're looking for stocks with very high short interest, because if that thing gets going, it's really going to get going, right? There's an inherent catalyst underneath the surface from the mechanics of the market. When it comes to these insider transactions, I like to be in things that are uptrends. But if the CFO, who knows exactly what's going on in this business better, Strazza likes it when the CFOs buy better than when the CEOs buy, just to put things in perspective.
Oh, yeah.
How much did he buy? $5 million? Something absurd. Crazy amount.
For Adobe?
Yeah. He knows something, obviously. And he doesn't have to buy that stock. I'm sure he's got plenty of stock. He's the CFO of the company, so his whole life is basically dependent on this company. Yet he feels the need to go out of his way to buy more.
And look what happened, right? He bought this in September of 2022. And the narrative for the past year has been Adobe missed AI, right? And then Adobe just drops their last earnings report, stocks up like 15, 20% on
You
it.
know what their CFO's doing?
Missed
He's
it
sitting
all.
there with his wife saying, Martha,
No,
let me tell you something.
he knew.
We're closing deals. These yahoos over there, these Wall Street folks,
Dude,
they are, I don't even know how this guy talks, but in my head, he's telling Martha, his wife, over dinner that these Wall Street folks are missing the whole thing. He's got all the data. Obviously, it's his job to understand the data. And he's like, I'm going to take $5 million that we have, or whatever the number was, and we're going to buy more stock.
The market reacts to the numbers, right? The CFO owns the numbers. It's his numbers. He's responsible for those numbers. He better know or have a really good understanding of how the market's going to react. You know what else the CFO can do? Literally, without asking anybody. He makes these decisions himself, sends it down to his team. He could say, hey, let's expense some of those reserves this quarter. Let's pull forward some of this amortization expense, right? Let's take this loss this quarter. This is not illegal. So it's creative accounting, but it's still accounting, right? They call that throwing the kitchen sink. The CFO knows when they're throwing the kitchen sink at the market. They're going to expense everything. This will be our worst quarter. The stock's going to bottom. It's, blue skies from here. We're heading higher. He knows exactly when that's happening. And he's going to come in and buy $5 million worth of shares because he's so confident. And it works every time. Really does.
If I had the
Real
numbers,
fast.
I would probably be equally as confident, right? Obviously.
He knows what he's doing.
Real fast, JC.
That comes back.
Are you
We
still
don't
doing
care
your,
what he knows. We just care what he's doing with what he knows.
That's right. That's right. That was a
JC,
great
you still
example.
doing your 2 o'clock stream today?
2 o'clock stream. Let's go. So what are we doing? We're answering questions. We had a ton of feedback because, like Spencer said, it was the best ever, is what he said.
What am
So
I
a
doing?
lot of people have questions.
We
we
got
went
some very
longer
good
than we
emails.
thought
We
last
got some
week
very
at
good
the
emails.
event, so definitely check that out. We went in deep, so we didn't really have time to answer too many questions there at the end. So we're gonna make up for that. So sorry for getting into too much detail and being right. And Spencer Israel saying that we did such a nice job. I like to think that we did too, but I guess judge for yourself. I think it's really informative, particularly if you're not familiar with how these things work, right? Oh, did we lose Spencer?
We
All
lost Spencer. All right. Oh, he's back.
Oh,
All
he's back.
right. 2 o'clock. I'll be there.
2 o'clock.
I'll be there. Okay.
All right, sweet. We're gonna take questions.
It's on YouTube.
It's on the tube.
on
Fantastic.
It's on YouTube.
Do
It's
we
on our
have a link?
channel.
Do we have a
We're
link
on
that we can
YouTube. Go
provide
to
in
our
the chat?
YouTube channel.
Drop him.
Yes, I do.
Can I
yeah.
get Lee on here?
I'll drop it in chat.
Yeah, let's get in. We got
Yeah,
questions.
I'll drop
Let's get
in chat. I'll bring it in on.
Thank you.
We got questions. Does
Come on.
Ian have answers? I hope so.
Always.
I like his bumper.
Oh, yeah. Yeah, it's one of those.
Are we bringing him in? Ian Cully in the house. Ian,
Good morning,
every time
gentlemen.
I see you, you have less hair.
What's going on over
I
there?
try to stay on top of it, you know.
You went from
You know how
leading
hot it
the
gets in
league
Florida?
hair to now.
It's hot. It's hot down here.
Okay. You getting a lot of rain, Ian? Or are you okay over there?
Yeah, we got a lot of rain yesterday. Actually spent the day playing in the rain with the kids. It wasn't lightning, so we got to swim too a little bit, but it wasn't a beach day for us, unfortunately.
Are y'all aren't flooded over there? You're okay.
Yeah, no, we're not flooded. Are you guys flooded down there?
Not really, not like South Florida, but we're just getting pummeled like every day. It's just more rain.
Yeah.
Anyways,
Now where I am, it's beautiful every day here in lovely Avalon.
I keep hearing.
Beautiful. It really is spectacular. I really, really like it here.
Awesome.
I'll see you in a month.
Oh, I gotta get a crib out here, and I'll just spend the whole summer here.
You should.
Yeah.
I think I think I will. I guess we'll see. We'll see.
So
there's the problem is there's way better investments that I'm in than vacation real estate.
yeah, I mean, you wouldn't want to have to sell a CryptoPunk for this.
Can you imagine? Yeah, I don't want to do that. I don't know. I think I'm going to sell my CryptoPunk. It's not doing anything. It's just sitting there.
You're gonna sell your house in the metaverse to buy a house in the real world. God.
Oh, my house in the metaverse really isn't worth much, but the CryptoPunk, it's just sitting there collecting dust in this
2
work of
years
art.
ago,
I don't know
was
anything about art. What do I know about art?
2 years ago, and we should have known it then. It's so clear with hindsight, right? We were literally talking about, hey, let's get a property in the metaverse. We can have like meetings and hold conferences there. I don't even know what we were saying to each other or how it even made sense at all. But we were saying things like that. Remember, like, I'll get a house here, and like Fahmy might have a house down the street.
But hold on. But Strazza, you're missing the point. We did do that. That's what this is.
But that was the top, is my point.
Oh, no, but we did do all those things. We just did it on YouTube instead because it makes a lot more sense because that's where the people are. There's nobody over there.
I was literally sitting here like with my keyboard, like jumping around in Decentraland and stuff. Like,
yeah. Yeah, remember that? That was awesome.
Yeah, good times. Really good times.
Good times. I still have some of that AXS that I'm still staking.
Axie? Yeah.
Axie Infinity. I've been staking some Axie Infinity forever. I have a shit ton of Axie Infinity that I've been staking for a zillion years. Okay.
Go ahead.
Ian Cully. We had a really interesting conversation earlier today. And we're talking about interest rates and how, you know, they were talking about how you're going to see a bid in bonds, sort of like bonds move first. You're going to get a bid in bonds, and that's going to suggest the indexes roll over. And I don't know how I feel about that. You know?
Yeah, I don't know how I feel about that either. You know, and I still don't see bonds as a defensive play. I don't think a bid in bonds are going to signal.
And if we were going to go into a bear market and a recession and all the things that they've been telling us for quite some time that we're going into, you don't think that bonds are going to catch a bid in a flight to safety in that environment that the S&P has a 20% correction?
That's a great question. I have no idea. I have no idea.
Like, do you get that? Or, right?
Yeah.
Or is it a situation where bonds are collapsing, dragging down the stock market further, like we saw in 22?
You know, I think we get that type of reaction from the bond market if, in fact, the Fed hikes instead of cuts. Their next move.
But why would they hike if it didn't Canada cut? Didn't France cut? Aren't a bunch of people
Europe cut, Canada cut.
That's good for the cut crowd.
That's good for the cut crowd, and maybe they cut prematurely. And
right.
like we talked before, like after the Fed
is there
cut,
a lot of precedent to that? To some of these foreign central banks cutting too early and reversing that? Is there precedent to that?
No, you know, I can't say. I can't say, but we've talked about
Larry McDonald. I'm talking to Larry. I got a meeting with Larry later this afternoon. I'm going to talk to Larry. Get Larry in here, talk some foreign rates. What do you think, Ian?
I think that's a great question.
Let's do that.
Awesome.
Larry's talking to somebody in a different. I mean, we talk to people in a lot of different countries, but Larry, I feel like, only talks to people in other countries.
Bilello is another good one for that. We could have a good conversation with Charlie about that.
Yeah, get Bilello in here. Why hasn't? Come on, Spencer, get Charlie in here.
Has Charlie
Why hasn't Charlie been on the show?
Has he not?
I don't think so.
Yeah, get Charlie on. Yeah. Both of those guys would be great. But
come on, Spencer.
But they tend to move in the same directions around the same time, right? So as we see, it's one of those like make a list situations. As you see more and more countries start to blink and make their first cut, then you can start to presume that our next move at least won't be a hike, right?
I mean, you got to wait and see. I mean, I think Wednesday was a great example. You get some soft data, CPI, market loves it,
and
dollar down, and then the Fed shows up later in the day and they're a little more sobering, and then you get this big reversal.
Yeah,
so,
we had this cool CPI, and then Powell comes on and he's like, yeah, big deal.
Right. Right. Right.
Hold on. So here's the big question. Do you buy this dip in financials?
I think
risk reversal in Goldman Sachs?
I think it's too soon. Well, Goldman, the big six are different.
Look at regional banks. Do you think regional banks are going to break down here? Right at that 200-day moving average, haven't been oversold in.
Okay, here's what I do think about regional banks. If this support zone goes, we lose more banks.
Yeah.
We will lose more banks. If this support zone goes, like we could be there this afternoon, say goodbye to some more banks, and that's fine, right? We've done this before. Now we've seen this.
I mean, if these regional banks break down, I mean, if these regional banks break all of that support, this support, Fonz, throw that up. This support on KRE 45.5, you lose that. I mean, man, things could get nasty in regional bank land.
Here's what's different about regional banks breaking down today versus regional banks breaking down last cycle or 5 years ago or 10 years ago. These are regulated entities. Their upside is capped because their downside is capped. We can't look at this group of stocks and take away the same risk on or offensive information that we used to. That's just what it is. Yeah. We are socializing our financial markets and our banking system in America in a huge way. And March of 2023 was a big move in that direction. The rest of the world is paying attention. Banking forever changed during the regional banking crisis last year. I don't think you ever get that risk on information from this group again because the government has told you they can't go away. So think about what that does for the psyche of the market. These are now protected stocks. That was never the case. We used to let them blow up and disappear. Goodbye. We don't do that anymore. I don't think you're going to get that risk-on offensive gauge from this group anymore. We got to tear up that.
But if they break down, what does that mean for interest rates? That's what I'm looking at.
Right. Yeah, it's still not a good look to see carry break down.
It would suggest that the market thinks rates are either going to stay stuck, elevated here, or be moving higher, I think, if this chart's breaking down. Lower interest rates should have buoyed this group last week, didn't. Right? Look at what the 10-year did last week and look at regional banks. They couldn't get up off the ground. It doesn't look good. It doesn't look good for these guys.
No.
Again, I don't think you overthink it, though. I don't think you overthink this information. I don't think we look at it and like, oh, we can't have a bull market without the banks. I think you're going to have bull markets without the banks in the future.
Without the regional banks, but the money center banks you need.
They can go up, but the same with them. They're going to be the ones paying for the reserves, right, and the funds that save the smaller banks. Like
throw up the rates chart there.
It's not good for them either. It's tough to be a bank in the U.S. right now.
How do you guys feel about that?
There's a lot of charts that look like this.
There are
a lot of charts. So
in this scenario, regional banks are breaking down. U.S. 10-year yields breaking down. Bonds are ripping. What is the S&P 500 doing in that environment?
Ripping. I think the S&P.
You think if yields are rolling over, banks, because tech is leading.
Yeah, I think if yields roll over,
biotechs catch a bid and right?
Yes.
Remember, regional banks of the Russell 2000 or 220 something of the Russell 2000 stocks are regional banks, the most, right?
If rates break lower in a real meaningful way, regional banks will be ripping.
Yeah.
It saves them.
So could that be a catalyst for this breadth to turn around?
It would improve the breadth situation a lot, and I think that the same dynamics that would put a bid in the bank, put a bid in the banking group, would also put a bid in things like biotechs, broader small caps, right?
What about industrials down here in support, right?
So many industrials still look so good.
Made new 15-week lows on Friday for industrials. Nice reversal candle on both the S&P industrials and in the Dow transports. That's something I'll definitely be watching today and this week to see if we get any follow-through action from those candles on Friday. So far, disappointing at best here for the market. So, Ian, final trade. What are you liking?
I like assets that aren't correlated with rates and the dollar.
Yeah,
it's just been chopping sideways. It's been messy. So I like looking at other areas.
Is that it for natural gas? And now the downtrend continues, or buy this consolidation in natty gas?
I say buy the consolidation. Yeah. I think we can wait. I think we'll wait for a better signal, a better level to trade against. But yeah, I do like natty gas heading into the end of the year. I think we just got an early pop.
Yeah. Marathon Petroleum.
Can you show Ian my chart of copper miners?
Fail breakout. Yeah.
How come I'm seeing this all over the place in materials?
Because this is what copper looks like. Zinc or nickel looks similar. Now, not new all-time highs for nickel, but I mean, we're looking at zinc, nickel, aluminum. Lead never really got going. A lot of the base industrial metals are either pulling back to major support levels, or they're failing to hold new highs. So yeah, it makes a lot of sense.
Man,
but we got to understand where it's coming from, though. Understand where copper's coming from. I mean, yeah, it's correcting. It has some room to continue to correct before actually challenging our bullish thesis. So
Ian is basically saying, zoom out here and look at the left-hand side of the chart.
Yeah.
Like we made such tremendous progress, these groups, these material subgroups, off of the pandemic lows, that you could easily look at this chart and be like, what a sloppy mess. This is terrible. Like 3-4 years of sideways at this point. These guys are digesting a lot of gains off of the 2020 lows, these groups, right? So I think your point is, Ian, you don't throw them away. You be patient with them here.
Right. Exactly.
Yeah,
exactly.
I'm with you. I'm frustrated, but I'm with you. I got stopped out all my steel stocks, all my copper stocks. Sucks.
Well, I mean, it gets back to the deteriorating participation, with the indexes. Strength is narrow right now. So, it's going to be frustrating. Still bullish, but frustrating.
Recess. Let's go.
All right. Recess. I'm doing it. It's happening. Or not.
Come on,
Okay.
Spencer. You got to press the
Or
button.
not. I don't know. I did. I pressed the button. Whatever. Let's pretend I pressed.
Imagine shoot at the screen. Can we just talk? Can we get that like in slow mo? Spencer shooting at the screen, like if it's like Duck Hunt, in 1987 or something. Two quick shout outs. I want to give a shout out to Polpo, a restaurant in Avalon, New Jersey. They really had the langostinos are just to die for. Very, very good. Make sure you get the lemon on there. And they also have, it's called polpo, so the octopus should be good. They do an pulpo crudo, so like a octopus, like thinly sliced, like a carpaccio kind of the octopus. Holy shit. There's good eating on this island, but man, that particular item might be my favorite dish in the entire 7 Mile Island at Polpo, the pulpo crudo. Oh my God, amazing. So I just want to give a shout out there. And I will see you at 2:00 today, talking hot corner, answering your questions. Strazza will answer the filings questions that he's better at. But I'll try to weigh in as best I can. I've learned a few tricks.
It'll be fun. It'll be really fun. So I, in the wild, found a bottle of Domaine Carneros sparkling, JC, this weekend at Publix. I was really surprised by it. I thought that was super cool. Mary, Alfonso, Grant, Danny will know what I'm talking about. We visited that winery. So I don't know if like it's always in Publix or something, but I just noticed it now. But I thought that was really neat. So got the bottle from the vineyard that we visited out in Sonoma last month.
So you're gonna get like the your basic you're gonna get like your basic Domaine Carneros. It's like they'll probably give like a brut or something like that.
Yeah,
but
I think that's what it was.
You got to go directly to them to get the good stuff. Like Le Rev is like their cuvee. You ain't getting that at your grocery store.
Got it. So neat,
but it's a good way to go. I like
cracked open the Rancho Maria
sparkling wine
yesterday.
Fonz just had his this weekend too.
Shout out Rancho Maria.
Nice. Very nice.
I donated mine back to the group.
Monday, Flow Show, 10:30, right today. Strazza, Sean, right here on the channel. Come back at 2, the special Hot Corner stream. We'll answer your questions. That's what we got. So smash the like, go make some money. Thanks to Matt Caruso. Thanks, Ian, for hanging out. And see you in a little bit.
Adios. Look, I'm Spencer.
Peace.
I can't take no loss. I don't even know what it